Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about SoFi Technologies SOFI stock and how it could literally 5x. We're also going to talk how low the SOFI stock price could go considering the current stock market environment. So we're going to be going over the latest price targets and news updates for this particular company, and then we're going to move on and talk about Palantir Technologies PLTR stock and how despite two great catalysts, the PLTR stock price hasn't really moved much in the positive direction. What's causing this? And then lastly, we're going to go over how Palantir Technologies is defending users from facial recognition technology that is violating privacy rights of users. So a Bank of America analyst actually wrote a short article, and this article shows that Palantir actually keeps customers and the public in mind in terms of data privacy and just privacy rights in general when it comes to technology. So for more videos like this one, remember to go and smash that like button right now. Comment your thoughts down below about SoFi Technologies SOFI stock and Palantir Technologies PLTR stock. And without further ado, let's just jump right into today's stories. So SoFi Technologies, ticker symbol SOFI, is a company that offers a full suite of financial services and products, and they mainly target high earners, young high earners. The main reason for this is that high earners, particularly young high earners, are very unlikely to default on any loans that they take out from SoFi Technologies, and it also helps SoFi with their underwriting standards, which are different from regular banks. So although you might get a loan from a regular bank, you might not get a loan from SoFi Technologies and vice versa. To put this into an example, if someone recently graduated from university with a top computer science degree, they're going to be earning around $150,000 right out of university, although they will not have good credit history because they are just starting. So although traditional banks will put a lot of emphasis on the FICO score or their credit score, SoFi Technologies takes a slightly different approach. And because the majority of SoFi's customers are very young high earners, this actually gives them fantastic resiliency during times of uncertainty and volatility in the overall stock market. For instance, in 2021, the company generated around $732 million in terms of their non-interest income, and that would make them around the 27th largest bank in the United States by that particular metric. More good news when we're talking about their share price is that the company's price to book value is around 1x, which is actually really good, especially for a company that ranks so highly among other banks, and they are a relatively newer bank that is growing at over 40% year over year on a compounding annual growth rate basis. Currently, the SOFI stock price, or SoFi's stock price, is $5.99 per share. However, very negative critics and investors of SoFi Technologies thinks that the company is worth somewhere around $7, while more bullish investors think that the company could surge all the way up to $22 in the next 12 months. And right now, clearly the current stock price is below both of these price targets, which in my opinion makes it a good buying opportunity. However, this is not an excuse not to follow proper risk management principles and policies, because I personally do not overexpose myself more than a 5% initial allocation to a risky growth company. More good news is that analysts from Morningstar actually put SoFi Technologies' fair value price at around 3 times their price to book value, which would equate to around a 200% upside from the stock's current levels. Another analyst actually chimed in about SoFi Technologies' fair value price, and he gave an estimate for their fair value for SoFi Technologies, which went as high as $15 per share. So overall, that is very bullish news from stock professionals. And we also have to keep in mind that because the current stock market environment is not being friendly to growth stocks, technology stocks, financial institutions, and fintech companies, clearly SoFi Technologies, which is a conglomeration of all of those things, clearly the company is being hit very hard. SoFi Technology barely makes it into the top 100 financial stocks in the Russell 3000, 1000, which is just the combination of the Russell 1000 of large cap companies and the Russell 2000. And in total, there's around 382 financial stocks in that particular index. However, SoFi Technologies does rank in the top 100. In terms of SoFi Technologies growth, they have an A- rating. For value, they have a B+ rating. For quality, they have another B+ rating, and for momentum, they have an A+ rating, which in total gives them a total score of an A-, which to me is not that bad, especially if we consider that in 2021, student loans made up around a third of the firm's total origination volume, referring to their loans, while their home loans made up around 24%. And the reason why this is not good is because both of these things have been hit very hard lately due to the student loan moratorium, where former students do not have to pay on their student loans right now and their student loans are not accruing interest. This has led to this market not wanting to refinance their student loans right now, which has hurt SoFi Technologies. Also, in terms of their home loans, because of rising mortgage rates and interest rates, more and more people do not want to refinance their home loans, or they don't even want to take out a home loan in general. And many professionals actually think that the pain in the current stock market environment in terms of rising interest rates and mortgage rates are actually going to get worse. For instance, if we look at what Robert Heck of the online mortgage broker named Morty had to say, he says, it is very possible we'll see mortgage rates head towards 7% or higher, reflective of the inflationary environment of the 1980s. He goes on to say, we aren't close to being there yet, but it's also not impossible, and inflation data will be the market driver of the summer and the remainder of the year, end quote. So he basically is saying that things are going to get worse before they become better. Also, if we look at what a Morningstar analyst actually had to say about the current stock market environment in terms of rising inflation rates and rising mortgage rates, he says that while we do not expect the number of multi-product clients to increase, this process will take time and likely require further reward and incentive spending. Until SoFi can build these intertwined relationships with its customers, there is little to hold them to the firm beyond price and reward spending, end quote. So he's basically saying, as soon as SoFi Technology loses their competitive advantage in the market, they don't think that their consumers are going to stay loyal for this particular company. However, I actually reject that logic because these high earners can clearly afford to pay these higher interest rates, and SoFi Technologies does have very competitive rates compared to other banks and fintech companies. I don't think that these customers are going to go elsewhere because SoFi Technologies is very competitive in their current stock market. Now, this article goes on to say that investing into SoFi is very risky and you're basically betting on the flip of a coin, and I actually tend to agree with him that SoFi Technologies is a rather risky growth stock to own, but it also does have high reward coming with it if you plan to hold this company for the next 5 to 10 years. But adding on to that, he does say that SoFi Technologies could become a fintech success story, and I do agree with him because they basically offer anything that someone could probably need in terms of financial services and or financial products, such as brokerage services for your investing. You can also invest into cryptocurrencies with them. They offer financial planning and wealth management tools, auto loans, credit cards, and home loans, as well as many other things. And despite the rising interest rate environment, which could send the SOFI stock price, which is their ticker symbol, down another 20% from their current stock price, SoFi Technologies could have great high returns for investors who are willing to hold this company for the long term. But again, like I said earlier, you need to make sure that you are not over allocating yourself to this very risky growth stock because you don't want to take on unnecessary risk. Even Jim Cramer, which is personally not my cup of tea, thinks that SoFi Technologies is worth more than what it's trading at right now. He says that I don't understand it. It's at $5. That makes no sense to me. That said, I have no catalyst to recommend the stock. So basically, he's more of a short-term investor for SoFi Technologies because he wants to identify a catalyst that will cause the stock price to surge back up. And although I personally do not like Jim Cramer, he's just not my cup of tea, I do agree with him on this particular point that SoFi Technologies is somewhat undervalued if you have a long-term time horizon on this particular company, and to me, it's definitely worth more than $5 per share. Moving right along, SoFi does still trade at around 47 times their projected 2022 adjusted earnings. So clearly the company does have to grow into this valuation if that's even possible, which some investors think it is. But the good news to me is that because SoFi Technologies serves very high quality borrowers and high income earners, it's going to make their business very stable in terms of if we go on or into a full economic recession. So despite the economic environment, because SoFi Technologies customers are such high earners, they are most likely always going to be paying on their loans that they have taken out, so there's really no risk of them defaulting. At least there's less risk compared to other companies. Also, SoFi Technologies is set to surge once the student loan moratorium ends, which I think it will end eventually, probably in the beginning of 2023 is my guess. However, currently the deadline for the student loan moratorium is in August, so that could act as a fantastic catalyst either in the beginning of 2023 or the end of August, whenever that ends. And I've done multiple other videos going into detail about the student loan moratorium and how it's actually a good sign for SoFi Technologies, because right now the demand to refinance loans are actually just being pent up, and as soon as the student loan moratorium is finally lifted, that demand is going to flood into the market. So ultimately, I do like their business model. They are very stable and resilient, and I do want to hold this company for the long term, but I don't want to overexpose myself to it. Even analysts from Piper Sandler think that the company is worth at least $8 for the next 12 months. So clearly, I do think that the company is undervalued right now. But now let's jump over to Palantir Technologies and their PLTR stock. Palantir Technologies, if you didn't know, is a big data and analytics company that serves both commercial clients as well as government enterprises. And basically, Palantir Technologies, with their various platforms, interpret and analyze data to help the management of those various organizations make informed data-driven decisions. A Bank of America analyst actually recently talked about this. However, I already did a video on that, so in today's video, we are going to go into detail about how this next generation data analytics company is going to benefit a lot from the general public's worry about user privacy rights due to an ever-emerging technology, which is facial recognition technology, also known as FRT. So basically, the main concern is that it's not regulated enough, and it's really infringing on user privacy to have your camera always record you or even use your facial recognitions in other cameras in stores or even your phone camera. And can this data that was obtained through facial recognition technology be sold to other companies? So this Bank of America analyst wrote this by saying, "We see governments focus on managing FRT, which is again facial recognition technology, data usage as one area of opportunity for Palantir. The company's Foundry software enables granular access controls, oversight of data usage, and secure cross-agency collaboration." So not only is this data, once it is actually obtained by a computer system, it's going to be very secure, and data leaks are not going to be very probable. The Bank of America analyst went on to actually really say that Palantir has a huge commitment to safeguarding user privacy rights and privacy rights of their users, and they even pledged to do this in writing for their 2021 10K annual report filing, which to me is very nice, because Palantir Technologies already has access to a lot of consumer data and just data in general. So they are really trying to make this data as secure as possible so no data leaks happen, and that this data is not sold to third parties and other companies that want to get their hands on this data. Right now, the PLTR stock price trades for around $10.08 per share. However, very negative investors think that the company is worth somewhere around $6, and that's their price target for the next 12 months. And very bullish, positive investors think that the PLTR stock could reach $16 per share. However, I do want to point out that the company actually has recovered quite nicely despite the current stock market environment. However, we are going to have to determine if this is going to be long-lasting. In the end, the Bank of America analyst has a $13 per share price target for this particular company, which gives investors around a 30% upside potential from the stock's current price if you want to hold on to the stock for the next 12 months or so. But again, these are just guidelines. It's not guaranteed that this company will hit this particular price target. Another thing that I did want to add is we've already covered this in a past video, but I do want to let you know that despite Palantir Technologies obtaining a US military contract named Titan, where Palantir Technologies is competing against Raytheon Technologies, which is really good news because they are are receiving money for this particular contract. I also want to say that we made a video concerning Palantir's strategic partnership with Guidehouse, which is a fantastic organization that has both commercial and governmental ties and a major network. They're like the third largest consulting company for the government, which is absolutely huge how they now have ties to Palantir Technologies. But despite these new projects that Palantir is developing for the Titan contract and their partnership with Guidehouse, the Palantir Technology investors have not been very impressed, which to me is kind of concerning. However, I would love to hear your thoughts down below about SoFi Technologies' SOFI stock and Palantir Technologies' PLTR stock. Remember to go and smash that like button, comment your thoughts down below, subscribe if you are new, and I will see you in the next YT video.